Okay, I'm here, but I will. I just disappeared. Bye.
Hello and welcome to our afternoon webinar of the new COVID release funding for small businesses. As we wait for registrants to get online, just a few housekeeping things. If you have any comments, please feel free to use the chat box. If you have any thing that you'd like to share, feel free to use the chat. However, if you do have a specific question that you'd like our SBDC presenters to answer today, please use the Q&A box. This helps us keep track of your questions and ensures that your questions do not get lost within our chat box. And again, we're just allowing a few moments for everyone to log into this webinar. All right, we'll go ahead and get started. Again, before we do a quick little note about the chat box. If you want to make a couple comments and interact, please feel free to use the chat box. However, if you have a question pertaining specifically to the information being presented, or if you have a question that you'd like our presenters to answer for you, please use the Q&A box, as that will help us keep track of any questions that are coming in, and it will make sure that your question does not get lost in our chat box. All right, Paula, go ahead and take it away.
All right, welcome everyone. Today we're going to be talking about COVID-19, those relief funding programs for small businesses. So let's get started. Today, as you all know, there are some new funding programs available for small businesses in 2021 as a result of the Consolidated Appropriations Act and Economic Aid to Hard-Hit Small Businesses, Nonprofits and Venues Act, which was signed by the President on December 27th in 2020. So today we're going to give you some information about each of these programs to help you kind of identify which programs are appropriate for you. Some of you might be familiar with some of them and just need to learn more about what's changed for this year. So we're going to be talking about the PPP loan program, the first draw, second draw, and just some reminders on forgiveness. We'll be touching on the EIDL Loan Program Extension and that targeted EIDL Advance Grant that you may have heard about. There have been some updates to the Debt Relief Program for those with SBA loans, and also the grants for Shuttered Venue Operators. And then we're going to kind of finish off with talking to you about SBDC counseling services and how to request those services. So just know that with any of these programs, we are still waiting for some of the official guidance on them. So what we're presenting today is what we know about these programs today. Some of them have a lot of details to them, guidance documents. So we'll do our best to answer the questions as we know them, as I said, and they're rapidly changing. But if you're interested, you can always keep up with new information coming out by going to the SBA.gov website. And also you can find the detailed documentation at the US Treasury website, and both of those links are provided there. So I'm joined today, my co-facilitator, Nancy Hahn. So let me start with my brief introduction, and then I'll let Nancy do hers. My name is Paula Whittekind. I'm the CARES Program Supervisor. I've been a business analyst with the Maricopa SBDC for about 4.5 years now. Prior to that, I was a small business owner of consulting business for 15 years. So like many of our counselors, many of us have been or still are business owners. And then prior to that, I've got about 20 plus years in the training program development industry. So Nancy, how about you? I'll have you give your brief introduction.
Okay, thank you, Paula. I'm Nancy Hahn, and I'm an analyst with the SBDC as well. I've been here for almost a year, and my background is basically small businesses. I've had 6 small businesses that I've bought, sold, managed, or started, and also a background in sales and real estate. So I'm very excited to be here today and to be helping you guys wade through the information. There's a lot of it, and so we'll get started.
All right. Before we jump into all of that information, I'm going to give a brief overview of Maricopa SBDC for those who may not be familiar with us. So the Maricopa SBDC is part of a national network, America's SBDC network, and we're part of the Arizona Small Business Development Center network. And we do have about 17 counselors just here in Maricopa County, and we have about 10 SBDC centers located around Arizona. And what we do offer is counseling, and it is no-fee counseling. And we are able to do this because of our funding sources. So we are funded locally by Maricopa Community Colleges and at the federal level by the Small Business Administration, and also through our partnership with the Arizona Commerce Authority. So not only do we provide counseling at no fee, no cost to you, but we also provide training programs, webinars such as the one we are offering today, many of which are for no fee. And then also we have a host of resources to help our small business clients, which I'll be sharing with you in just a moment. Just to highlight a couple of the technical assistant areas that we provide to small businesses in Maricopa County, we've got some listed here. Now, obviously, since last year, we've been helping our clients navigate the disaster loan programs. But in addition to that, we have funding business analysts that bring knowledge in from that lending world. So we help our clients kind of get lender ready and find and get access to capital. We also provide services around financial review, how to be more financially resilient. We have resources, knowledge and skill in marketing assessment and planning, buying, selling businesses, exit strategies, operations, human resources. In addition to that, we have experts in manufacturing and technology and commercialization, as well as export, international trade, and our affiliated PTAC partners, they provide counseling and government contracting. So if that's of interest to you, just know that there are resources there for you as well. But this is just a sampling of all the knowledge and skill that we help our clients with. So if any of those kind of pique your interest, we'll be telling you how to request counseling services at the end of the program today. Here's just a quick kind of a visual view of the types of resources we also provide to our clients. We license a product called Growth Wheel, and this covers all areas of business development, provides templates and guidance that we use in our counseling sessions with clients. We now provide access to Live Plan, which is a platform where you can develop your business plan, both the narrative and that financial projection portion. We have access to ProfitSense and SageWorks, which provides some great financial benchmarking data, great for planning purposes as a small business owner. Our SBDC Net organization provides access to marketing and research. And then we also have access to IBIS Industry World Reports. Again, another great resource for planning purposes for our small business clients. And with that, let's jump into the topic of the day. So let's start first looking at the PPP loan programs, the first draw, second draw, and just touching on that forgiveness process. So the Paycheck Protection Program, when it was launched last year, right, it's a loan designed to provide an incentive for those small businesses to keep their employees on payroll, providing funding so you can keep your employees on payroll. And the idea is it is a loan as you start out, but it is forgiven as long as you follow the criteria for forgiveness. So with this new legislation that was passed in December, this makes available what is called a first draw, right? So businesses that did not apply last year for a PPP loan now have an opportunity to apply for the first time. So they're labeling that as the first draw PPP. Now there's also available a second draw. So if you're a small business that received a PPP loan last year, now you can be eligible to apply for this second draw PPP loan again. And both are now open for applications, but just know that it's only available until March 31st. So when we say available until March 31st, that doesn't mean you apply on March 31st. What it means is you need to have that loan in place by March 31st. So don't delay. If this is something of interest to you for either one, we'll be talking about where to go apply with a lender. But you'll want to approach the lender and get through that application process so that you get that loan approved by that March 31st date. So we don't want you to miss out on that date if it's of interest to you. Now, this year, so you see at the bottom of the slide says still eligible. So the PPP loan, many of the things are still the same or very similar, some slight changes. So what they've done now in this new round is they've added some additional types of businesses that are now eligible for the PPP loan. So you see them listed here on the screen. Now, general eligibility rules, right, for that first draw loan. So we're talking about the first draw loan right now, is you need to have been in operation on February 15th of 2020, meaning, and not permanently closed. Some businesses temporarily closed, but you cannot have been permanently closed. You are eligible if you're self-employed individual or an independent contractor or a sole proprietor, even if you don't have any employees, or maybe you're one of those self-employed sole proprietor and you have employees. So this PPP first draw loan does apply to you in either of those situations. Now, if you're a seasonal business, you're eligible if you were in operation for any 12-week period between those dates listed there. It's that February 12th, 2019 through February 12th of 2020. And partnerships, of course, are eligible to apply. They're going to apply on one application as that partnership. Now, where to apply, right? So this PPP loan, you go to a lender to apply for the PPP loan, the first draw and the second draw. Now, obviously, logically, if you have a lender that you're already doing business with, logical to kind of start with them and find out if they're an approved PPP lender, because they do need to be approved through the SBA. If you don't really have one, or you want to search beyond the lender you're already working with, the Arizona SBA District website does have a comprehensive list of the PPP approved lenders. And so I just took a little screenshot there, you see it on the screen, but there are many lenders listed on that list. So that's a great place to start your search for that PPP lender. And it does give contact phone number information on that list. So the link is provided here on the screen, but there again, you can go to that Arizona SBA District website to look for that list. Now, we mentioned the SBDC counseling services. This is an area, just if you have not already signed up for SBDC counseling, or maybe you're already working with a counselor, this is something that we can kind of help you look at that list and find out what lender might be a good fit for you, just based on your business and the type of industry that you are in. So we can certainly help you wade through that list and find a lender that suits you the best. Now, obviously, one of the first questions you have to figure out is, how much am I eligible for? So what I've done here is just put together like 3 scenarios that we frequently get asked questions about. So we're going to walk through the calculations just at a very high level. So say you're self-employed or sole proprietor and you don't have any employees, right? You know you can apply, but what does that calculation look like? So the first thing you're going to do is go and refer to either your 2019 or 2020 tax form 1040, looking at the Schedule C, line 31, and you're looking for that net profit amount that's listed on that line. And then what you're going to do is there's ruling in here where you cannot use a salary that's greater than $100,000. You can only go up to $100,000. So let's say as that sole proprietor on that line 31, if you had $120,000 listed there, you could only use $100,000. So they've capped it at that $100,000 limit. So what you're going to do is you're take that line, the amount on line 31, you're going to divide it by 12, because what you're trying to do is get an average monthly salary. And then you're going to take that average monthly salary figure, and then you're going to multiply it by a factor of 2.5. And the reason for that factor of 2.5 is that the whole premise of this, when the PPP loan started, is it gives approximately 2 months worth of salary for you to use to pay your employees to keep them on your payroll. So that's where that 2.5 factor comes from. Now, looking at the second scenario, if you're self-employed or sole proprietor and you have employees, so the same thing, because we get the question about, well, what do I do? As the owner, what do I do to account for my salary? So it really just builds on the scenario we looked at. The same thing, you're going to look at that line 31 for that net profit amount. And now you're going to calculate, add to that, the payroll costs for your employees. Here again, they still have that limit of, say you have 1 employee, that is making over $100,000, you can only account for the one up to the $100,000 for that employee. And you cannot include any independent contractors. Independent contractors are able to go out and apply for their own PPP loan. So make sure you're not including any independent contractors in your calculation. And then it continues with that step 3, the same thing. You're trying to get that monthly average. So you're going to add the 1 and 2 together, divide it by 12 for the monthly average, and then you're going to multiply it by that factor of 2.5. Now for seasonal employers, it's a little bit different. Here they allow you to use an average total monthly payments for payroll taking a 12-week period. So you can select this 12-week period, and they give a date range there between February 15th, 2019 and February 15th, 2020. So you get a little bit of leeway for those seasonal employees. Now there are many scenarios for calculating this loan amount, and there's actually a very extensive guidance document on how to calculate these loan amounts. Overwhelming, I know, for a lot of small businesses. So that documentation is up on the SBA Gov site or the Treasury site. But here again, as counselors, we're helping our clients try to figure this out because the numbers can really get to be overwhelming. So just know we can help you with that. Here's just a quick example with a couple of very simple numbers. So we won't take too long on this, but it's the same basic steps I walked you through. So this first example is maybe you don't have any employees or you have no employees that make more than $100,000. So you start off and you determine your payroll costs are $120,000. There's nothing to subtract because no one's making over the $100,000 limit. So you're just going to carry down the $120,000. You're going to divide it by 12. I'm in step 3 to get that average monthly payroll cost of $10,000. And then you're going to multiply it by that factor of 2.5. So what you end up with is $25,000 for that estimated loan amount. Now this step 5, I did include it because if you're filling out that application form for the PPP loan, you're going to see this listed in the application. And this only applies to those who received an economic injury disaster loan back in early 2020. And there's a specific date range around that that may not apply to many business owners, but with this new law, they've allowed those borrowers to be able to kind of incorporate it into this PPP loan. So, but just to keep things simple, I didn't want to muddy the waters and include that. So we didn't worry about that. So in that first example, $25,000 is that approximate loan amount for the PPP loan. Now moving over here to our example 2, basically now in this example, we're saying, well, we've got some employees that are making over that $100,000 limit. So now in this case, we say we've determined our payroll is 1.5 million. We've got about $300,000 that had exceeded that cap. So we need to subtract it out, ending up with 1.2 million. And then in step 3, we're going to determine that average monthly payroll cost dividing by 12, which is 100,000 per month, multiplying by that factor of 2.5. And so that leaves us with an approximate loan amount of $250,000. So these are very simple examples again, but just know that we can help you through those more detailed calculations because everyone's business is a little bit different. And what goes into that aggregate payroll cost calculation, there's a pretty extensive list. So just know that, as you're putting together and getting ready to apply, there's supporting documentation that those lenders are going to be looking for. So, it's basically some of these tax documents. So make sure you're gathering your tax documentation together as part of getting ready to apply for the PPP loan. And you're going to also find in the application form that a lot of the details around what documentation do I need is provided in pretty great detail in those application forms. So that's a good resource as you're filling that out, that it is going to be listed in there as well. We've just kind of captured a couple of the key things here on the screen. Now let's talk about forgiveness. So now once you've gotten that loan, right, what you need to do is you need to make sure you're using those PPP funds as intended. And so let's talk a little bit about that. So the PPP loans qualify for full forgiveness if during the covered period, you're following the disbursement around at least 60% of the monies that you receive must be used for payroll purposes, at least 60%. Now, you may decide to use 100% of the PPP funds that you get for salaries. That's completely okay. You just need to meet that minimum of 60% for payroll. And then it also allows you to use that additional 40%, whatever's not being used for salary, for other business expenses. And I'm going to share a list with you here in just a minute about what those expenses are. And then, of course, the idea behind this loan is, you want to maintain those employee compensation levels. You want to keep those your staff employed. Now, the loan forgiveness covered period, this is going to be a little bit confusing, but what happens is they call it this covered period. So you get your funds dispersed and from the lender, and then you have between 8 and 24 weeks to use those funds. And I'm going to show you another example of visual that will, I think, clarify it a bit more, but you've got 8 to 24 weeks to use the monies up. And just a quick note too, is last year, in this forgiveness process, what was happening is as you apply for forgiveness, they were subtracting an EIDL advance. So if you received an economic injury disaster advance grant, they were subtracting that from the forgiveness amount. But just note that if you're in that situation, that's no longer happening. They've kind of eliminated that from the forgiveness process in 2021. So let's take a look at it in more detail about the 60% and the 40% and what you can use that for. So 60% must be used for payroll. And so here's a nice laundry list of those items: salary, wages, commissions, payment for vacation, parental, family, medical, sick leave, allowance for separation or dismissal, payment of employee benefits, payment of state and local taxes. And then for sole proprietors or independent contractors, that includes like wages, commissions, income, net earnings from self-employment or similar compensation. Now that other 40%, you can use it for additional items. And they've actually now expanded this list of what you can use this additional 40% for. So still rent and mortgage interest, utilities, interest on any debt obligations that you incurred before February 15th. But now they've added additional covered operational expenses, property damage, supplier costs, and then also, if you are a business that you've had to, maybe you're a restaurant and you've had to do some changes to your environment to make it safe so that your customers can come in, maybe you have to purchase PPE equipment. So those expenditures can now be included as part of this 40% of the funds that you can use that are allowed. All right, here's that visual I told you about, just to kind of show you, because we often get questions too about, what's this covered period of 8 to 24 weeks? But then the next question becomes, well, how long do I have before I have to apply for forgiveness? So after your funds are dispersed, you've got that 8 to a maximum of 24 weeks to use the funds up. Right? So in this example, say we received our funds in early March. Now that 24-week period ends up being around that August timeframe. So that's the amount of time we have to use it on payroll or those other expenses. And that, when you hear the terminology of covered period, that's kind of what they're talking about. But now at the end of that 24 weeks, that's when the clock starts ticking as far as when you have to actually apply for forgiveness. And you will apply for forgiveness from the lender that you got that loan. So there's quite a bit of time here that allows you to do that. But just know that if you just fail to apply for forgiveness, that is going to convert now to a loan, right? It doesn't automatically convert, it doesn't automatically be forgiven. You have to apply for the forgiveness. And any amounts that are not forgiven are converted to a loan. So let's take a look at what that means. So if any amount is converted to a loan, it's a 1% loan. The interest is deferred, but interest does start accruing once you get that loan. And it has a maturity date of 5 years. Now there's no prepayment penalty on this loan. As I said, interest accrues from the date of disbursement, and no payments on that principal or interest are due until after the date on which the SBA remits that loan forgiveness to your lender. So once you get through that loan forgiveness process, that's the point that if you had anything not forgiven, meaning that you used funds that did not meet the 60 or 40% criteria, then that any amount not forgiven is converted to the loan. And then there is no collateral or personal guarantees required. So moving on to the second draw loans, a lot of the things are very similar. So we're just going to touch on some of the differences for the second draw PPP loan. So now you're eligible for a second draw PPP loan if you previously received that first draw loan last year, okay? And you will have had to have used or will use that first draw, the first PPP loan funds. And you can have no more than 300 employees. And now for the second draw, you do need to demonstrate that there was at least a 25% reduction in your revenues between a comparable quarter from 2019 to 2020. So you're comparing one quarter in 2019 to a quarter in 2020. And so, and those are calendar quarters. Now you can also go ahead and kind of look annually as well to determine that. So you can kind of use both approaches, but you have to show that 25% reduction. Now, calculating that loan amount, where I took you through those examples where we had that 2.5 factor, so that calculation is still the same for the second draw, but now in this new funding round for 2021, if you're in an accommodation and food service industry with that North American Industrial Classification Code of 72, you are now able to use a multiplying factor of 3.5. To get that to determine the loan amount. So that allows you basically like a little bit more than 3 months now of salary if you're in that particular NAICS code of 72. So a little more funding available to you there. And as we said, you have to prove that 25% reduction. They are going to ask for supporting documentation. So just know that if you're applying for a loan that's $150,000 or less, maybe in that application process from the get-go, you don't have to necessarily supply that documentation right away, but you will need to supply that as you're heading into that loan forgiveness process. So just gather your documentation and keep everything together so you're ready to go as you apply, whether it's for the initial loan or for the forgiveness process. Here again, this is just emphasizing the same calculations we went through, but that again, that NAICS code of 72, you can use the 3.5 factor. Now, if you're a fairly new business, with the NAICS code of 72, you're that new entity and maybe you don't have 12 months of payroll costs, there are some ways that you can calculate and still be able to, take advantage and get the PPP funding. So it's just that calculation is going to be based on that average monthly payroll cost, kind of based on the business. So here again is another great touch point with an SBDC counselor to kind of help you figure out what that amount might be. Because every business is different, so there are always different nuances to it. And just to close out our discussion about PPP loans, we're starting to get clients and questions from clients that, they went through the forgiveness process last year and they had that EIDL advance subtracted from their forgiveness amount, and they ended up maybe with a loan at 1%. Well, just know that with this new legislation, it eliminated that. So those monies will be refunded to those borrowers, and that's going to happen kind of behind the scenes between the SBA and the lender, and then you'll be notified from the lender. So just know that there's nothing you need to do in that particular situation, but I would stay in contact with your lender if you fall into that particular scenario. All right, so with that, a couple of other items and reminders. Make sure on any of the loans, documentations, or grants that you get, keep all documentation, keep all loan documents, keep all application numbers and loan documentation numbers, because oftentimes we're working with clients and, in the chaos of last year and the stress of last year, sometimes things get lost. So you want to keep those in a very safe place. So that's just a reminder for all of you to help make things easier as you move through the process. So with that, I'll turn it over to Nancy, unless Laura, there were any questions related to PPP that we want to try and address at this point.
I didn't see any open questions in the Q&A. So as a reminder, if you do have any questions and maybe you put them in the chat box, please put them in the Q&A, because oftentimes they'll get lost in the chat box because we do have private messages going back and forth sometimes between attendees or registrants. So again, if you have any questions, please put it in the Q&A. Oh, we did get one. There we go. So someone asks, what if a What if, as a self-employed, you do not have payroll, but you take draws instead of a formal payroll?
And so that's where we were talking about in the calculation. It's looking at that, your tax document, right? The 1040 and the Schedule C on that line 31. And that's where you're going to start with that net profit number for that payroll calculation. And then you'll go through the determining the average monthly payroll, dividing by 12 and multiplying by that factor of 2.5. And we are going to post this recording. So if you need to go back and review that, it will be available for you.
Yes, we do post those every Friday. So just so you all have a bit of a timeline for that. And then I do have one more question that came in, Paula. What about partnerships, calculations, forms? What line in K1? Samantha, I don't know if you would like to expand on that or not.
And I'm not familiar off the top of my head of what specific line that would be. I can tell you if you have an SBDC counselor, follow up with them because they can help you find that in the documentation. You can sign up for counseling, but also on the SBA.gov site or that Treasury site, there's a specific document that's called Calculating Your First Draw PPP Amount or Calculating Your Second Draw PPP Amount, and they give different scenarios, and I know that's addressed in there too, so that's another source of information that you can find that. So, all right.
And
Nancy,
those were all the open questions that we had.
All right. Nancy, I'll turn it over to you. And you're on mute, so you'll want to unmute.
Great, thank you, Paula. So we're going to be looking first at the EIDL loan, which a lot of you are familiar with. It's the Economic Injury Disaster Loan Program. And I think, Paula, you'll be in charge of the changes in the panel. So anyway, the terms and conditions of the loan, you need to meet the financial obligations and operating expenses that could have been met had the pandemic had not occurred. And that is the purpose of the program, to help you through that period. It's available until the end of December 2021 or until the funds have been spent. So just keep that in mind. Time is of the essence. If you can do that as quickly as possible, you'll be sure to be part of the loan amount. This is a loan, this is not a grant. And the loan is not forgivable, but it does have very good terms. For small businesses, it's 3.75%. And then for nonprofits, it's 2.75%. The terms are payable up to 30 years. 1 year is deferred on the first payment, but you are still continuing your interest payments. There are no prepayment penalties or application fees, and that's another plus. So that's part of the terms and conditions for that. And then for eligibility, the small businesses with fewer than 500 employees are included, which is also including the sole proprietors, independent contractors, and 1099, and self-employed persons. Eligibility is based on the size of the business, and you can check with the SBA.gov website for your particular industry's size information. And then also private nonprofits with less than 500 or fewer employees, faith-based organizations, as well as agricultural businesses. And the applicant must be physically located in the US. So the use of the funds, the eligibility is to cover payroll, continue on with healthcare benefits, pay your rent and your utilities, along with fixed debt payments. And again, you need to maintain your receipts and contracts for all the loans spent for 3 years from the date of final disbursement. And the borrower, to the extent that they can, purchase only American-made equipment and products with the loan proceeds, and not use any of the proceeds to relocate without prior written permission from the SBA. So the things that are ineligible are payments of dividends or bonuses, disbursements to owners, partners, officers, and others, repayment of stockholder principal loans, except when the funds are injected on an interim basis as a result of the disaster, and then expansion of facilities or acquisition of fixed assets, refinancing of long-term debt, paying down or paying off loans provided or owned by other federal agencies, including the SBA, but excluding IRS obligations. And then any penalties resulting from non-compliance with a law, regulation, or order of federal, state, regional, or local agency. And then contractor malfeasance. Those are the terms. You can apply. It's a pretty straightforward application, again, on the SBA.gov site, and it will walk you through that. And then we have the Targeted EIDL Advance Grant, and that is not a loan, it's a grant, and they advance funds up to $10,000 to the applicants that are in low-income communities or who have previously received an EIDL advance loan, or who have applied but did not receive the funds due to lack of program funding. And to be eligible, you need to demonstrate more than 30% reduction in revenue during an 8-week period, beginning in March, on March 2nd, 2020 or later. And documentation will be required to confirm that 30% reduction in revenue. You need to be located in a low-income community and have 300 or fewer employees. The SBA will notify participants, so you don't need to do anything. They will be emailing beginning or mid-February, and the first priority are the ones that did receive an advance last year for less than $10,000, and then the second priority will be all of those who had applied but didn't receive due to lack of program funding. And then just a brief overview of the SBA debt relief. So this provides a reprieve for small businesses during the pandemic in 2020. The SBA did pay 6 months of principal, interest, and any associated fees owed for 7A, 504, and microloans, and they're going to be providing additional funding, and we'll be extending that for 2021 to eligible borrowers. And we have not received the final on that yet, but tentatively right now, anybody that received debt relief in 2020 may be eligible for an additional 3 months of debt relief beginning in February of 2021. And then all of these with the NACES codes that you see here, if those are applicable, you may be eligible for 5 additional months of debt relief. And any new SBA loans in 2021 may be eligible for 6 months of debt relief. And then any community advantage loans will be eligible for up to 8 months of debt relief.
So Nancy, if I could here, there's the document around each of these different scenarios. There are more than this. It's very detailed. So this is just a real high level kind of a preview of what it looks like, you'd be eligible for if you are an SBA borrower, that 7A, the 504 microloans. So here again is a great place to kind of meet with a counselor to kind of help you navigate, what you might be eligible for, but also, stay in touch with your lender because this happens automatically, kind of behind the scenes. But you want to have a clear view of what you can anticipate the SBA will be paying for the SBA loan and if you're eligible. So I definitely encourage you to reach out to that lender that you're working with.
Very good. And then the last one is the grants for shuttered venue operators. If any of you are owning or participating in the shuttered venue, which includes things like live venue operators or promoters, theatrical producers, live performing arts organizations, motion theater operators, museum operators, and talent representatives. And again, those are very specific, and there's many different types. So you want to make sure that your particular venue is applicable for this, but it's well worth looking into. And to be eligible, you have to be fully operational as of February 29th, 2020. You must show a 25% reduction in revenue. And you cannot apply for a PPP and a shuttered loan or grant at the same time. And if you are not eligible, you are not eligible if you receive a first draw or second draw PPP in 2021. But you can apply if you received a PPP prior to that date of 12/27/2020.
Here again on this one, still waiting for some guidance, more guidance documentation on this. But if you are one of those business types that Nancy was listing there, just know that, you know, you can't have both the PPP, like she said. So it is a business decision. You have to base that on. One thing that was suggested in a frequently asked question document that's available is, how do you get ready? Because the application is not live yet. So if you're one of these types of businesses, the recommendation was that you get a DUNS number from Dun & Bradstreet, and then actually you'll have to set up a SAM account. You know, for government contractors, they go to sam.gov. So there's a process that you'll need to go through that you can start now in order to prepare. So the application process for this looks like it's going to be slightly different from some of these other programs. But here again, you know, as counselors, we can kind of help navigate. And like I said, we're still waiting for additional guidance on this particular program. So some things are.
This is not on the SBA.gov.
It gives some information on there, yes.
But
and
to
the
actually,
FAQ and the frequently asked questions document is also up there as well. And that's got some good information if you are one of these types of businesses to review that, to review the information there. All right.
Okay, we'll turn it over to Paula for any questions.
Any questions there, Laura?
I do have one. It's quite lengthy. I'm going to kind of summarize it for you, Paula. And again, if this individual, James, if you would like to schedule an appointment to speak to a counselor, please feel free if you'd like to expand a little bit more about your specific business. But this person was wondering, you know, they've had of 2019, made their first sale in 2020. So they've been growing.
Mm-hmm. Could you start again? You kind of cut off right at the very beginning.
Had a business in 2019. They made their first sale in March of 2020, and they've been growing. And they haven't been able to pay a salary, so they were wondering if there's any loans available for their business.
So, right, I think that's one of those, as you said, I think it's best to probably talk to a counselor about that, because we'll have to look at more than just that information. So we point you in the right direction. I don't want to steer you in the wrong direction.
And we will be providing that link for all of our attendees here shortly. Someone was wondering if they can have a SAM account with their DUNS and Gauge and NAICS codes. I'm wondering if they mean if they can have both a DUNS and a SAM account.
That I'm not, it sounds like this is around the Shuttered Venue grant. I'm not sure how that will work on that side. So we don't necessarily have the details on all of that.
Someone operates an outdoor street festival, which could not be held in 2020. Does this type of business qualify for any grants or loans?
What type of business again?
They operate an outdoor street festival. Okay.
I mean, potentially here again, not knowing all the specifics of the business, potentially a PPP loan, potentially an EIDL loan. And the Shuttered Venue grant, there's some stipulations around having fixed seating and different requirements around eligibility and details around that particular grant. So that may not be something that would apply.
Okay. And it looks like they are an LLC. So I'm wondering if another appointment with a counselor would be great for that.
Yeah, but definitely, you know, the EIDL loans, if you did not apply for an EIDL loan last year, would probably be an option for you. And then also the PPP loan is likely an option for you as well, as far as these disaster loans that we're talking about.
And if someone received an SBA loan, the EIDL loan in 2020, can they apply for a second one, or is it only one time?
As far as we know at this point, it's only the one time. We've not seen any additional information that they'll reopen it to those who received an EIDL loan last year.
And then we have another question that's not really related to EIDL loans, but it is related to kind of the tools that you mentioned at the beginning of the webinar. They said that Growth Wheel is online and our other documents online too. So if you want to talk a little bit about those tools.
Sure, the Growth Wheel, and I can go back to that slide very quickly to make everyone dizzy, but let's go back there. There we go. There we go. So the Growth Wheel actually is an online platform. So as we're working with our clients, we have the ability to invite them to the Growth Wheel platform where we can share the Growth Wheel templates with you. The Life Plan's also an online platform. The Profit Sense in the IBIS industry world and the SBDC net, those are tools that you use through your counselor. Your counselor gives you access and can run reports and request research reports for you. So hopefully that answers the question.
And that was all of our open questions, Paula
Okay.
and Nancy.
All right. I'm going to jump down to the bottom of our deck here. So just very quickly, let's touch on how to request counseling. So the first place to start is to go to maricopa-sbdc.com and you'll complete a request for counseling form. So all of our counseling is by appointment only. So this is the starting point. So you'll fill out a very simple kind of one-page request for counseling form, and then that gets you into our system. And then what happens is that you're assigned a lead counselor. And typically the assignments are made, you know, we're spread across Maricopa County, a large county, and, you know, we're working virtually now and have been through COVID. But when things return back to normal, many of us have offices on Maricopa Community College campuses. And so depending on industry, depending on location, the type of need, you'll be assigned a lead counselor. We'll sit down with you in an initial counseling session and get to know you as a business owner, talk about your business, and just look at some of the areas of need that you have to, you know, grow your business and where you're at, and really put together kind of that plan for how can SBDC, how can your lead counselor, and how can the SBDC resources help you get to your goal, right, to fill some of those gaps. And then after that initial session, we do meet with our clients on a regular basis. And sometimes it just depends on what specific type of project we're helping you with. But it might be, you know, once a month. Typically, it's every 60 days. We're at least meeting with you virtually, having a phone conversation, some touch point, because we want to help provide that guidance to help you with your business, continuing to grow your business. So we're trying to build this longer term relationship to be that kind of partner and guidance partner for you. And then we also track business goals. So there is a reporting form that we have each of our clients fill out every year to kind of track how are sales increasing, jobs, capital that you've been able to access to grow your business. And so this is just a very simple representation, but it's a very simple process to go through. So start with the request for counseling form, and we look forward to kind of meeting with you. So with that, let me just highlight a couple of upcoming webinars, and then I'll turn it back to Laura to kind of close out the session. So we do have, if you're in need of some marketing work for the business, we are continuing our Great Marketing Turnaround workshop. It's a 3-session series. So if you missed the first session, not to worry, you can jump in on any session. But tomorrow we're going to be talking about customer messaging and sales promo during this time of COVID. And then that 3rd session is coming up February 18th. Now, we also are starting a new digital marketing series with our counselor, Chris, and we're going to, a couple times a month, we're going to have some conversations around digital marketing, what's going on with the trends, just to help you learn different things that are going on, different tools you can apply to your business to help you start to transform your online marketing and your digital presence. And then if you are a restaurant, we do have our Restaurant Resilience series once a month. And in March, our topic is on ghost kitchens and virtual concepts. And so we'll be holding those monthly. So hopefully you'll check us out again, and you just register for those programs just like you did for this COVID relief funding. And we've got the link on the screen there. And with that, Laura, I'm going to turn it back over to you.
Excellent. Paula, we did have one more question come in at the last minute here.
Okay.
But someone was wondering if they had a restaurant operating and then they had to move to a different location during the pandemic that has less expenses, like for rent or utilities, can they still get a PPP loan? Because it may appear that they were not operating prior to the pandemic because they were in a different location, but they have the same business with the same federal IDs.
You know what, I would say, since you need to apply with your lender, just have that conversation with the lender that you're applying with, and they should be able to provide you some guidance there. I'm not familiar with that. So good question though.
Thank you.
Yeah.
All right, if you could go to the next slide for me, Paula. Just a couple reminders, we do have some great resources that we do update every Monday and Friday with different COVID-19 resources and funding relief for you. That is on our Maricopa SBDC website. It looks like this picture that Paula has put into our presentation. We also have our training events calendar, which I have included the link for that in the chat box. And then another thing is you can always read our counselor biographies. As Paul had stated in the beginning, we have a lot of counselors with lots of different areas of expertise. So please feel free to read their biographies. And they also have their contact information listed there if there's someone specific that you think could really support you and your business during this time. And again, please follow us on social media. We have Facebook, LinkedIn, and I also believe we have Instagram for more information about small businesses and to stay current on the programs that we have coming up for the month. And at the end of this program, there is a survey that we ask that you fill out because we do use these to consider for future programs and topics. And we really want to support you and your business during this time. So please, again, fill out that survey and let us know what future programs you would like to see. And again, we'd like to thank you for joining us today. Thank you for your time. This recording, again, will be posted on our website. So if you would like to refer back to it, it will be posted on our website, typically on Fridays. Again, when we update our websites, Mondays and Fridays. If you have questions, please feel free to reach out to me. You got an email earlier before this webinar about signing up. You can send me an email through that as well. And we thank you for joining us. Paula and Nancy, thank you for presenting today. And I hope you all have a great afternoon.
Thank you, everyone. Bye.